Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, we have Charlie Brown. He's the managing director on Nasdaq's market intelligence desk. And we are here with instant reaction to the Federal Reserve cutting rates by 25 basis points for the first time in 11 years. Been quite some time, Charlie, since we saw this kind of movement from the Fed. And if we pull up our first chart here, we can see that the reaction was, okay. Maybe we're not pulling up. Here we go. See, 40 seconds after that hit the wires, we could see that initial pop and drop within the S&P 500, and now we're just actually down just about 0.1%. So kind of a snooze fest reaction.
Basically a snooze fest. I think the initial reaction was basically the black boxes, just reading the wording in the statement. And you really have to let that sort of play out over a period of time. It's settled into a range about now. I think where the rubber really hits the road is when Powell starts his press conference at 2:30, and if he indicates that there will be more easing in the future.
All right, and I guess the reaction is really going to come off of that. If we see some more easing, I would imagine the market will move to the upside.
Absolutely.
And vice versa. In terms of the language, we had a couple of dissenters, but they're also going to end their balance sheet reduction earlier than planned, August 1st versus a few months later out. Does that really make too much of a difference within the whole scheme of things?
It doesn't make too much of a difference. It is somewhat dovish in nature, so that was a positive, net positive for the whole thing. So that's one thing that was good out of this statement, out of the Milt statement.
Yeah, well, I mean, with the folks that you speak to all day long, you're constantly involved with our listed companies and other clients. What's their reaction been throughout this entire campaign leading up into the basis cut? Do they feel as if this was what is needed?
I think they do. I think they want a little more accommodative policy right now. I think they feel the effects of the contraction over in China and Europe, and they're concerned about that. So any relief in terms of monetary policy, I think they would welcome for their business.
All right, so what are you going to be looking forward to next? Because we're kind of coming out of the thick of earnings. We really haven't paid too much to the fundamentals because everything has really been predicated on what the Fed is doing and what's happening with the U.S.-China trade war. Really,
and the market really has not been trading on fundamentals. It's been trading on this whole rate scenario that's been going on right now. So essentially, we're going to see we've gotten through the first half of earnings. About 76% have beaten so far. That's good, but we've got to realize that's on muted expectations going forward.
And the quality of the beats too. You saw some, top line beats, but it doesn't necessarily mean that it was happening with bottom line revenue growth. And in many cases, there might have been some growth, but not as good as it was last year.
Correct. The one positive out of a lot of these earnings releases is the fact that on forward-looking guidance, they've either maintained or they've upped the guidance. So that is a net positive for the marketplace, and the market is reacting accordingly.
It'll be interesting to see once we're done with earnings, kind of get into that summer lull the last couple of weeks of August, really where the market's going to turn its attention to. I would imagine it's going to continue to be Fed speak and the day-to-day machinations of the implied thoughts around U.S. and China trade. Yeah,
I think you're right. August are the doldrum days of summer. September tends to be one of the worst months in the marketplace. So I think it's really going to be driven on Fed buzzwords and things like that, less on earnings as we get through this earnings period.
All right, Charlie. As always, thanks so much for joining me at MarketSite.
Welcome.
And thank you for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.